Right, good evening everyone. Hopefully you can all hear me. Firstly, well done for getting on the Zoom webinar. So far we've got over 70 people and only one person needing help to get on, so we're doing pretty well. I'm sorry that we're having to do it over Zoom tonight. Obviously we'd much prefer to do it in person, but for those of you who booked on in good time, hopefully you've got the food has arrived and that you haven't burnt it in the oven. Tonight I'm joined by my colleagues Polly Sewell and Shannon Hubbard. Polly is a partner in our rural department, working in a wide range of sectors, specialising partly in telecoms, which she'll update you on later. And Shannon joined us back in the summer. We've just had to explain to her where the kitchen was, as we're in the Bedford office tonight. Shannon has joined us having studied at Harper and then spent 3 years as competitors of ours, and it works in our planning department. Tonight, we're going to try and cover a range of things. Sorry, just wait for it to catch up. So tonight, I'm going to cover the agricultural transition. Last week, we had the DEFRA policy, the path to sustainable farming, covering the period 2021 to 2024. So I'll cover that, and then Polly will reinforce some of the things that I mentioned and also talk about the timing. Shannon will give you then a planning update before Polly gives you a bit of a rural update. After that, we'll ask anyone who wants to answer any questions. We'll try and answer them then. Just for those of you who aren't used to Zoom webinars, I cannot see you, I cannot hear you. You can be as rude about me as you wish, and I will not know. But if you'd like to ask a question, if you go to the bottom of the screen, you'll see a Q&A, and feel free to type in the question at any time through the talk, and then we'll answer it towards the end. Good. So tonight, I'm going to be covering the agricultural transition, as it's a hugely important effect on all rural businesses, because of the effect it will have on your cash flow, and it's all coming very quickly. So tonight I'm going to talk about the key themes behind the paper, then talk specifically about basic payment scheme and countryside stewardship, and start introducing you to the new environmental land management and improving farm productivity. The key themes about this paper are that it's public money for public. You'll have all probably heard the paper comes on the back of the Agricultural Act and sets out a lot more detail going forward. We've all a year for agricultural policy in England until 2024, done with the Treasury, which means that whilst we have this until 2025 and forwards. That's why when you look at the paper that's been published, they do talk much more about farm productivity than we were expecting. When you go back to the papers produced in the Agricultural Act, when it was published last year, it's a 150-page slideshow, of which about 30 pages talk about farm productivity and about how poor it is in the UK. Of all the sectors in the economy, we add on a pounds per hour basis the least value, at about £12 per hour, whereas the UK average is about £30 an hour. In addition, UK farming unfortunately lags behind quite a lot of our main competitors, such as Australia, Canada and New Zealand, in terms of how it's improving on its productivity. We therefore suspect, from what we have heard from DEFRA, that the next 3 or 4 years is very much trying to encourage farmers to increase their productivity before the money is cut. And that's what has been agreed with the Treasury. First of all though, basic payment. Hopefully all of you got paid last week. It was a record level of payment in terms of pounds per hectare. And also for the first time in the life of basic payment, they managed to pay 95% on the first day. It's rather typical of the RPA that they managed to achieve that in the last year of the full scheme. We already knew from the Agricultural Act that it would be phased out in 2028, so you would no longer receive any basic payment. We also knew what the reductions would be in 2021, and we've now got those reductions confirmed through till 2024. Everyone will therefore have a 50% reduction to this year's payment by 2024, and the bigger claimants will have a bigger reduction. The rates are on the screen for you, and they work like income tax levels. So if you have a claim of 70,000, you will have all the first three bands affected to your claim on those levels. The bigger clients, therefore, claiming substantial sums of money will see up to a 2/3 reduction in their claim by 2024. And our suspicion is with ELMS being launched in 2024, the reductions thereafter will be even more severe to get to zero by 2028. You hopefully have all seen by now that there are no longer any greening requirements, which means the 3-crop rule has gone, and also there's no longer a requirement for ecological focus area. That should make the claims going for the next few years simpler, and hopefully less penalties apply. And also within this transition paper, we've had confirmation the payments will be delinked in 2024. What that means is it won't matter what area you claim in 2025, your money will be based on the reference period, whether it be 2022, 2023 or 2024, or a combination of those years. The delinking will therefore mean that it's important to get your claim right for the next few years. In addition, within this transition paper, we've had more information about the ability to take a lump sum payment. That's now been confirmed that it will be for retirement only, with further details to be provided next year and consulted on. We're expecting the retirement option to have some quite extensive rules around it, so that, say, one partner within a partnership can't retire and the partnership takes a lump sum payment. But there could be some interesting conversations to be had there about succession, especially when they also give us more details about the new entrant scheme, which I'll touch on later. Countryside stewardship remains open for new agreements, all the way through to agreements starting on the 1st of January 2024. And so any of you who aren't in countryside stewardship now need to think carefully about why you're not and whether it's worth now looking into. We've also had confirmation that they will continue with extensions through to the 1st of January 2024. Just think carefully about whether you are better with an extension or better with a new agreement. From experience with extensions on high-level schemes, if they come and penalise you in, say, the 6th or 7th year, you will be penalised for the whole 7 years. Whereas if you enter into a new agreement, they can only penalise you for, say, the 2 years it's been running. In any new agreement that you enter into, there will be a break clause if you wish to enter into the environmental land management schemes. So you will still have the flexibility to jump out of countryside stewardship if you should wish. We also know that for countryside stewardship for schemes for next year, where we apply next year and they start the 1st of January 2022, there will be some changes. There are going to be some new options, in particular about air quality, and there may also be some more capital grants. The fact that DEFRA is going through the effort of adding options on a scheme that's only got a couple of years to go would suggest that they may be quite a good steer for what we may be required to do in future. So do just reconsider the mid-tier in particular if you're not currently in that scheme. That's enough about the current schemes. Moving forward, we've got environmental land management. So originally we were going to have 3 tiers to environmental land management. They've now been given names rather than tiers. So they will be the sustainable farming incentive, the local nature recovery, and the landscape recovery, with each one being more onerous and a more complicated application process. Environmental land management is going to go live for everyone from 2024, but there's going to be tests and trials from next year. And we've had confirmation now that the sustainable farming incentive, so the lowest tier, will actually start from 2022 and be open to everyone. In 2022, it will only be a relatively small scheme, and that it will focus on things such as soil management, pest management, nutrient management. But over the years, it will be expanded out. DEFRA's hope is very much to get everyone in the sustainable farming incentive who currently claims BPS. When we start talking about soil management plans, nutrient management plans, for those of you who were in ELS back in 2005, you'll remember they were options within ELS. ELS had a take-up of over 70% and was a broad and shallow scheme. We'll have to see, but it's beginning to sound like the sustainable farming incentive may have some links back to the old ELS scheme. So that's sustainable farming incentive, which you will all need to be looking at whether to enter into in 13 months' time. The next scheme will be the local nature recovery. And this will be the replacement for your mid-tier, which will come from the end of 2024. This will be about creating, managing, restoring habitats, flood management, rights of way, education, lots of the things we currently see within the mid-tier scheme, but extended with hopefully better payments. Most of you are probably aware that at present, your payment is based on an income foregone model. So they work out what the income you are losing by entering into that option, add in the costs to come to the rate per hectare. Going forward, DEFRA is talking about a profit element to be added in as well. So this, and the hope is that they have quite wide take-up of this scheme. As details of this scheme come out, think carefully about your farm. It doesn't necessarily have to be over every field. We believe, are there corners of fields which would be better with creating habitats? Typically, the poorer quality fields also could be of interest. Finally, the most onerous scheme, and the one we have least detail about, is the landscape recovery. This is going to be very much large scale. There's talk of 2,000 hectare minimum claim, and that is looking for you to join up with your neighbours to provide things such as woodland and forest creation, ecosystem restoration, salt marshes. It's where DEFRA is probably going to have the most free thinking. They're talking about things such as possible reverse auctions, where they will give us a schedule of what they would like you to bid for, and then people will bid down the price to provide that schedule of requirements, and it will be competitive. They're also talking about public-private funding. For example, will BA sponsor one auction and contribute half the money? We don't know. As I say, we have very little detail about the landscape recovery scheme, but it could be of interest. There's two other minor schemes within the environmental land management, which is farming in protected landscapes, which is basically a replacement for the upland DLS, which will be targeted to the national parks and the areas of outstanding natural beauty. It's going to be things such as stone wall restoration and that sort of thing. And given the people on this call today, I won't really talk any more detail about it. The other one is the animal health and welfare pathway, which will come in from 2023. This pathway is going to be quite interesting. The fact that they call it a pathway rather than a scheme suggests that they're trying to lead us somewhere. And there's very much a feeling within DEFRA that the livestock sector needs to raise standards to a higher level than perhaps the confinable crop sector. Therefore, there's going to be this pathway for capital grants or annual payments for improving welfare, biosecurity, health and disease support. We await more details on this, but the aim is to have all livestock farmers within the scheme. And so anyone who has got livestock should be keeping an eye on this. We then move on to farm productivity. You might have seen various articles of this already in the Farms Weekly, where they're talking about the Farming Investment Fund. Actually, the Farming Investment Fund breaks into two funds, the Farming Equipment and Technology Fund and the Farming Transformation Fund. The Farming Equipment and Technology Fund is going to be for improving profitability in the environment. It's going to be very similar to the current Countryside Productivity Scheme, which has had really good take-up for the few rounds that we've had, but potentially there'll be higher value items available. So currently it's limited, but they will use the same application process and the same standardised pricing. The Farming Transformation Fund is looking much more at just efficiency and productivity. This is the one where they're talking about helping to fund reservoirs and irrigation networks, but also variable inputs, robotic automated technology, precision agriculture. This will be a two-stage application process, and the money available will be much larger. So it could be quite interesting to see where DEFRA goes with this. There's going to also be a specific slurry investment scheme for a couple of years as they look to improve farmers' slurry management. They've already said that after this scheme closes, the red tape will get harsher on slurry. And so the idea is to offer the carrot before the stick comes. On top of that, we'll have the farm resilience support, which will be money provided to groups, charities and businesses to help manage farmers through this transition, and the new entrant support scheme. We don't yet have details on the new entrant support scheme. That's another one that's going out to a consultation early in next year. But what I would say is if you are a new entrant or you know a new entrant coming into the industry, next year may be better to not register with the RPA, as there may be better support in 2022. Overall, what this all means is actually there's 12 schemes that we're going to be talking about for the next few years. Many of them can run at the same time, so you will be able to be in the basic payment scheme, the countryside stewardship scheme, the sustainable farming incentive, and say the farming equipment and technology fund. If you're a livestock farmer, it's entirely possible that in 2022 and 2023, you may be in 4 or 5 of these schemes. In 2025, you may be in 6 or 7. This money is going to be available for a relatively short period of time, and it's important everyone takes advantage of it. I'll pass over to Polly now, and I'm afraid it is literally a case of moving the screen, as we didn't want to be having half the conversations on mute. And she's just going to run you through the timing for all of these schemes coming in.
Thanks, Andrew. So, as Andrew said, because there are so many schemes, we thought it would be helpful to run through the timing of when each of them is coming in so that you're aware of what you need to look out for. So, in 2021, we know that BPS remains, but with the deductions that Andrew spoke about earlier. Applications will also open for the Farming Investment Fund, the Research and Development Fund, the Farm Resilience Fund, and Farming in Protected Landscapes. There will also be consultations on delinking of payments, which will focus on what the reference years should be. The Exit Support Scheme, which is the scheme that allows farmers to retire. Payment rates under the new environmental land management schemes, and how support for new entrants will work. There'll also be a continuation of the ongoing trials of ELMS. So then moving to 2022 and 2023, again, BPS will remain, but with the reductions. There will also still be applications for countryside stewardship, with the last start date for stewardship being the 1st of January 2024. So the last applications will need to be submitted spring, summer 2023. We'll also start to see the rollout of the Sustainable Farm Incentive, which, as Andrew said earlier, is the lowest tier of the new ELMS and the one that should be open to the most people. The Slurry Investment Fund and Animal Health and Welfare Pathways will also open, as will the Exit Support Scheme and New Entrant Support Schemes. So we know that 2024 will be the last year of direct payments under BPS. And from then we'll have de-linked payments, with the last payment being made in 2027. So from 2024 onwards, we'll also then see the rollout of all three components of ELMS. So we'll have had the sustainable farming incentive from 2022, but we'll also then see the local nature recovery and landscape recovery tiers coming online. There will also be a continuation of some of the other grants and funds that we've already discussed, but we will need to keep an eye out of when those schemes are open, because some, like the Slurry Support Scheme, we're already being told they'll only be for a short period. With the ending of BPS, we'll also see cross-compliance fall away. So the government are now working on a new regulatory and enforcement mechanism, which will come in from 2024.